Um, these levels in the market, these institutional levels, are psychological levels in the market. That's why I'm not a big fan of going on TradingView or just going on your chart in general and just marking up zones that you see, like just marking up zones, just drawing boxes up and, up and across the screen everywhere that you see, right? I'm not the biggest fan of that. But what I'm a big fan of is using your institutional levels and, understanding your psychological levels and not forgetting to use them when you're trading because of because they work. They're these key levels, and you can see how the market reacts at these levels. And when you're patient and you just wait for the market to get to these specific levels, you're going to see very strong reactions and you're going to find great moves, right? Because if we just go and backtrack the DXY even from a couple of weeks ago when it started its bearish movement, look where it pushed all the way up to, and look where it pushed from. It pushed from, I marked these levels red, the 20 and the 80, because they're like my buy zones on the institutional levels, right? Or buy or sell zones. They're my trading zones. I want to get in an entry somewhere in between these levels because I know that at minimum, I could be risking 20 pips, but at most, it'd be a 40 pip risk somewhere inside of these zones, 20 to 40 pips, depending on your entry. So now if we look on, like we said, if we're just backtracking and we're looking at these moves, the DXY from over here at this red line right here, it bounced up off of here. And then we saw 180 pip move, point move, pip point, whatever you want to call it. We saw 100 pip move, 180 pip move to the upside. And then what do we see happen after that? Where does it push right into? Right inside your institutional, right inside your psychological levels. And then what do you get from there? Drop down, EMA cross, drop down, hits EMA, hit EMA, drops all the way down for another 180 pips, right back to that same level. And then what do we see happen from there? Is that all that liquidity over in that area that, that was built up over here, all this buy side liquidity, or sell side, sorry, because sellers are coming this way. Where does it go now once it comes bearish? It takes out all that liquidity and it continues to drop. And then what do we see happen from there? It bounces and creates this area of support at this 50 institutional level right there. And then we build up and it buys up again off of that. And where does it buy up off of? For 150 pips, it buys up and it hits this institutional level right there. And then what do you see happen after it hits this institutional level? So after it hits that institutional level, same thing that happened up there, rejects off that level. And then what do you see? Drop down. And now what I'm waiting for to get in some buy plays with the DXY is where we're coming in right now. Why I like this setup going into tonight potentially, because if we can get it to drag down and hit this institutional level here, that's going to be a good trigger to know that we'll probably get some type of bounce, some type of reaction to push up off of there. So if I'm bullish on the DXY, if we come down and hit these institutional levels, then what am I going to be looking for potentially on EU and GU? What would I be looking to do on EU and GU if the DXY goes bullish from there? Then I'm going to be looking to short EU and GU. Or in favor, if you want to follow the DXY bullish momentum, then you may look to get in UJ buys or UCAD buys to go with that same bullish play, right? So that's essentially what I'm looking for with the DXY this week, is for one more drag to the downside to start this week, and then looking for some type of bullish momentum to go to the upside from there, with the DXY. So let's just let me look at it over here. And I have this purple line right here. I use these purple lines as like my liquidity lines, or where I see liquidity at in the market. And this is where I see liquidity at on the DXY, which is perfectly aligned with or institutional level right here, because I want to see about a 25 pip drag to the downside to take out that liquidity. And if we look at the DXY right now, that purple line from where we're at right now is about 14 pips or so. So I'm looking for this, and this purple line is coming from this low over here about, what is this, from February. This is coming all the way from February. This low right here that never got hit, that never got taken out. It went bullish from right there, bullish. All these lows that never got taken out are now getting taken out. They already took this low. They already took this low. And this is the next low that I see getting taken. And after this low gets taken, then I'm going to be looking for some type of bullish momentum. So that's what I'm going to be looking for, is, like I said, the DXY to drag inside of this zone over here and look for some type of bullish momentum from there. And then in return, when I look at Let's look at EU. Let's look at GU. If we look at GU, GU is already what? GU is very overly extended right now, right? You're not going to be loaning. If you wanted to buy GU, you would have been buying GU in the last couple of weeks. It pushed all the way up, pulled back, and pushed all the way up. Now we're looking to see where's it reaching for. And if you look all the way over to the left, all the way from February, what did GU do right here? It took out this high all the way from February, this double top right here. So GU's taking out that double top. So now you're not going to want to be looking for too many buy. You're not going to want to be looking for too many buy plays with this, right? Because now you're going to be wary of that it can retrace, the same way that it did right here off of that push, because we got one good push, one retrace, a very large retrace, and then you get that bullish play. So now you want to be careful of getting that retracement, getting that retracement off of GU right now. So I honestly probably won't look at GU too much because I don't want to sell it. I still see, we can see how high the next swing high is all the way up here. So, and all the way to get all the way up there, that's still another 130 pips to that high. So we're going to see it start to retrace. So depending on, like I said, I really won't look to be selling until we get all the way back to that high, but I won't look to really buy until we get a good enough retracement to where we can find another leg to get in off of, that first push, second push, and then we want to find that third push, but it can be harder to find the third push in the market. So you want to be careful of getting in the market on a third push because it's that last potential push, and it's going to stop hunt. It can go do something like that, reach, and then make that push to the upside. So it doesn't just have to come and, bounce off something like that and then just go. It can easily come, bounce, give a deep retracement, and then give a strong push. So you want to be very careful of, trading GU right now, in my opinion, when looking at GU. Looking at EU, EU is going to be, similar to the DXY. If we see the DXY drag down and drop down to take out those lows, and we want to see EU push up to take out these highs. So if we're looking at EU, it's that same thing. If you were buying, you've had a lot of opportunities to get in those buys already, and now you want to be very careful of that, because if we look at it, it's bought up once, push down, bought up twice, push down, bought up three, push down, bought up four, push down. So now we might be looking for one more manipulation to go and run these highs. But after that, then, it might be a very quick push to that upside to take it back to that downside. So I would like the GU setup more, the EU setup more than I like that GU setup based off of what we're looking at, with the DXY being, being where we're at right here, looking for it to drag down, looking for the DXY to drag down, take out those lows, and then get some type of bullish momentum. Still long-term bearish, but if you're going to be waiting for that bearish move, you need to see a good retracement first. So that's what I see with that. I like the UCAD setup. That was something that I was looking at this morning, and UCAD and UJ, just because UCAD's in that same type of area of where it's coming down, taking out these lows, and it does have more room of where it can drop down lower. But, potentially being able to play that reversal, you could catch some good pips back inside the structure up here, because I don't want to sell UCAD. I'm not going to look to sell UCAD unless you pull out like a fib from this swing high to a low, and I won't be looking to sell it again until we get some type of pushback inside of this area up here. So, you can either look to buy to sell UCAD, you can look to play the buys, exit out, and then, do that, or you can wait for it to retrace and then find that next push back to the downside. So it's just a lot of it turns into, finding out what type of trader you are, what you're comfortable with looking at, and just knowing where you're at in the market, knowing where you're at in the market. Looking at UJ, I like the UJ, I like the UJ buy setup too, just because of where we're at right now currently. If we're looking at it, we've already pushed down. We pushed down once, pull back, push down twice, pull back, push down 3 times, pull back, push down 4 times. And now we can be looking at something like that to happen with UJ, and to start flipping back into that bullish model. So that's I'm starting to see the reversals happening on EU, GU, UJ, UCAD. So it's just a matter of finding an entry, finding a play, and then also kind of just knowing what type of trader you are. If you're a swing trader and you don't want to look at the markets for the 3, 4, 5 days, then you're going to be patient and you're going to wait for, that move to get back in with the trend. But if you're day trading and, you're up for London, you're up for New York, then you just want to know, okay, if I am bearish overall and I play buys, I'm only going to be looking to scalp it. Or if I'm not, if I want to just wait for the trend, then I'm not going to play this buy. I'm going to play I'm going to play the move back to the downside, vice versa. So that's kind of an idea, that's an idea of what I'm looking at going into this week. And then the time and price part of everything is, I mean, it's what we do every day, right? It's what we do every day, and it's going to be the biggest deciding factor on if you're a profitable trader or if you're just somebody that, consistently blows their account. And that's like the biggest difference of just with anybody, like anybody that trades, in my opinion, you have, and that's like the part of knowing what type of trader you are, because I always hear, I get on social media or talk to people and, like, oh, I'm an Asian session trader. I'm this, I'm that. And me personally, I just don't trade Asian. There's not a single pair that I look at that moves enough on a daily basis that's worth trading Asian session. You can, beauty, the beauty and the, what is the word? I mean, the beauty and the, and I mean, the beauty and the beast of trading Forex is that the market is open 24/7, which means that you're consistently tempted to trade all the time. That some people might be better off doing like options and stocks, because you literally most of the time can't even enter a trade until the market opens at 9:30. So, that's one thing that I even had to go back with myself, with disciplining myself, of just, no matter how good of the trade looks, sometimes you just have to wait, like, because it's always going to be a move. If there was a move, meant to get it, there's going to be an entry if there's a movement to be in. If not, then it's not worth trading, and it's not worth risking your capital. It's not worth, it's just not worth trading. Like, as much as we want to make money, as much as we want to, and grind and feel like if we're not trading, then we're not grinding. And that's how I felt like for a long time. Like, oh, if I didn't enter any trades, then, I kind of just, I wasted time in a sense. And that's not the truth, right? It's more of being super selective with your trades and super selective with your entries, because that's where the real money comes in. So with the time and price aspect of everything, between 5 and 12 o'clock, this is time for you to live your life. More than more than anything. You don't want to be staring at your charts between 5 and 12 o'clock. It's 7 o'clock right now. Every day, at most, you want to spend 30 minutes to an hour on the charts, which is why, like this Zoom call and everything, we don't stay on for longer than 30, 45 minutes, because it's just a matter of the consistency. It's not who stays on the longest, it's who's the most consistent over the next 3 months, over the next 6 months. It's not about who has the most, trading hours, who's been on the, who trades the most. That's not the most profitable trader over the next 3 months. It's the consistent part of things, of following your trading plan, following your rules, not trading when you shouldn't be trading, and just doing the little things. And that's going to be the biggest difference of seeing the profitability. And whether you just kind of, you don't trade. And you guys know, I mean, it's almost like 250 people in the Telegram chat. It's an old Telegram, obviously, but and a Discord, everything all around. It's a lot of people that have been around for a long time that slowly fade away, because it's just, you either follow your rules and you're disciplined, or you're not. And like we always talk about, trading, it really exposes a lot with yourself, to where you really have to sit down and have an honest conversation about, where you're at, what what you're good at, what you're not good at, where you need to work at, and if you want to work on those things or not. Because a lot of people, don't want to have that conversation with themselves, or have it with anybody else, or anything about what they're good at, what they're not good at, what they need to work on, what they could be better at, what they can improve on. Because it's just it's a raw conversation to have. It's, and it's a hard conversation to have too, because it's just a lot of honesty that you have to have, and a lot of things that typically have to change for you in order to get to where you want to be at with trading. And those are like those are conversations I have with myself. I have with my close people, my friends that trade. And, sometimes you can talk to people, and sometimes people listen, sometimes don't. And it goes both ways. So with the whole, like I said, the whole point of me talking about this is, trading is the discipline. It's discipline, discipline, discipline. There's no reason to be trading between 5 and 12 o'clock, in my opinion. In my honest opinion, it's no reason to be trading between 5 and 12 o'clock. It's a waste of time. It's a waste of mental, and long term, you're just not going to be able to do it. Do you want to watch your charts, be active? Yes. So we take that 30 minutes to an hour every day, whether we're on a Zoom call or you're not on a Zoom call, just to go look to see what happened in the market, and see what moves played out, what you could have got in, what you didn't get in, and just seeing the moves over and over, because you just want to train your eye. So between 5 and 12 o'clock Eastern, we're not trading, right? We're just studying, doing a little bit of studying, but more than anything, getting ready for London session later, doing anything you need to do to get ready, working, if you have work, if you have school, whatever it is, so that you can get some rest before London, right? So now when we actually start trading, and it's a little different now, it's a little weirder now because of the time change. So London session actually starts at, it used to start at 3 o'clock Eastern. Now London session starts at 4 a.m. Eastern London, and 1 o'clock Pacific, 1 a.m. Pacific is when London actually starts. So this can throw some people off because you're used to bringing up your charts at like 2 a.m. or something like that Eastern, or 11 o'clock Pacific. And that, a lot of times that can be too early, because you're literally, if you enter any trades before 4 a.m. Eastern, really, before 4 a.m. Eastern, you're literally just trading manipulation. You're just trading manipulation. That's all you're doing is trading. And it's the same thing going into New York session in the morning. Anything before 9:30 in the morning is strictly manipulation. No matter what happens in the market, it's manipulation, whether it's manipulation for that day, for that session, or for that whole day. It's at some point it's manipulation. And then manipulating people to get in the market, because at 9:30, that's when the market actually opens, and that's when you can actually make money and lose money. Everything else before that is simply meant to lose money. Everything before that is sitting, you can't make money in that time frame. But like I said earlier, the beauty and the danger of trading is that you can trade 24/7, and you can enter trades whenever you want, right? So you really want to discipline yourself with London as not trading until 4 o'clock in the morning, not entering any trades until 4 o'clock, 4:30, 5 a.m. And like I said, this is a lot different now because, London is at 4 a.m. and then New York session is at 9 a.m. in the morning. So it's like, when do I sleep? If I'm up, the first hour of London, 4 to 5, 5:30, and then, London, New York is right back at 9 a.m. And then you got a personal life too and whatnot, right? So that's like the biggest part of a trading plan. If you don't have a trading plan, then you really just kind of trading for fun, because you're not really, you're not doing anything to where you can sustain it over the long term. That's what you want to build. You want to build good habits to where you could sustain them over, over a long period of time. So, like I said, there's a lot of conversations you have to have with yourself about what's realistic for you, what's not realistic, and just what you want to do. I trade both sessions, right? Like, that's why I take naps during the day, because I have no choice, right? Or I go to sleep earlier than I go to sleep earlier in the day so that I wake up at 4 o'clock in the morning, or 1 o'clock my time, and then I have to wake back up, at 5 o'clock in the morning for New York, 6 o'clock in the morning for New York session, and I sleep, like 4 hours in between that, and sometimes I just don't sleep if I got enough sleep before. So, it's just a matter of like a lot of your personal life affects your trading life 100%. Like what you're going through emotionally, what you're going through physically, like keeping your mind, keeping your body, keeping your spirit, all those things have to be aligned for you to be able to be successful with trading. So that's why I don't get mad when people take breaks and whatnot, because it's needed. Shit, I took a break for the last couple of weeks, almost in a sense, of just kind of stepping away for everything and just resetting, because it is needed. Like, you find yourself going so hard sometimes that you need to take a break. You need to just step back to just to get that, fresher breath air. So the beauty of trading, is that it's not going anywhere. It's not going anywhere. It's going to be here for the rest of our lives. So once you really hone in, once you really lock in, once you really focus and you get over that, that step, that hump, whatever it is that's, kind of been holding you back, there's nothing but, up and nothing but positivity to go towards. So, that's all I really have for the call today. It's been about 30 minutes. Like I said, the biggest thing, I guess, let's go back into time and price and go over some examples. Let's not cut it short. We'll be on only about 10 more minutes. So just hang on with me about 10 more minutes. We'll just go over some examples of time and price, and why you want to be patient. So looking at like GU last night, right? And this is why you could get so caught up into why you could get like I said, why you can get so caught up, like, and why it's so easy to lose money, but also why it can be so easy to make money as well. Because if we're looking at GU, you don't want to, you want to make sure that you're always, like we said beginning at the call, we established what was going on with the DXY. We established what was going on with the DXY is that it was bearish, it was dropping down to start the week. So that's when you start looking at GU and you mark off your highs and lows, right? So like, for instance, this is the high from last week. So I would mark that off right there, and we can see that it's connected already to that high from Friday. So it's basically like kind of like a double top right there, right? Now that's the high of the week. So after that high gets taken out, what do we always say? You know, you want to look to the left to find out, well, where after the market reaches above here, after the market reaches above here, oh, am I even drawing anything? After the market reaches above here, where can I be looking? Where can it potentially, you know, where can it reach for next? Let me find out where that is. And that's when you have to, you know, start zooming out, and you have to, that's why I always say about the phone thing, you know, you don't want to be trading on the phone is really just kind of like Russian roulette, honestly, like, because it's like, I mean, you can't really see everything that you want to see, and you don't really know what you're trading towards, and you're kind of just trading blind. You know, you're kind of just trading blind if you're only trading on your phone. And you can trade on your phone, but like I said, you know, you gotta do your markups. And then, I mean, the biggest thing is just having somebody to trade with too. Like, I enter trades on my phone all the time without looking at the computer, just because, you know, sometimes somebody else drops a chart and I can see what's going on and I know what I'm getting in. And you know your prices, right? So just marking up your charts is the biggest thing. Don't just go in there with a fully naked chart. If you're strictly on your phone, then, you know, just make sure you're doing your markups. That's it. Just being consistent with the markups and doing, you know, this type of stuff on a daily basis. So now that we say, okay, you know, this is the high of last week, where is my next high going to be at? That's that purple box right there. That purple box is just a high. That's liquidity. It's not a sell zone. It's nothing, you know, it's not nothing like, oh, just sell off of that. And that's not what it is, right? So now when we go into our 15-minute chart and we start looking for entries going into London last night, what do we see happening over here? You go between your 15 and 5 minute when looking for entries. But more importantly is that between 5 and 12 o'clock right here, what happened? Super sideways, just nasty, nasty, nasty. And then after 12 o'clock, so we have our power of three, right? For anybody that's new on a call, when you're going into trading at 4 o'clock in the morning for London session, this is what we're looking for. Is it's called a power of three, the PO3, right? You're going to see it in many different forms. There's videos. I have the videos on YouTube about it, the trainings and everything. And that's another thing. I uploaded all the trainings on YouTube for everybody for free. You know, whether you've been in mentorship, not in mentorship, all the new videos are on there. Old videos will be posted throughout time too. But everything is, you know, everything is on there on YouTube and whatnot. You can go through, you can watch it as many times, you know, as you want. And I'll be posting new stuff on there. So the power of three, right, is consolidation, manipulation, and distribution. So you're going to see consolidation, like we talked about time and price for my note takers, between 5 and 12 o'clock. 5 and 12 o'clock is consolidation, and that's the first box right here. That's 5 to 12 o'clock, consolidation, that's the C. And then manipulation is going to be between 12 and 4 o'clock. Manipulation between 12 and 4. So after the box ends right here, this is at 12 o'clock Eastern. So everything between here and the second box is considered manipulation. This is all between 12 and 4. That's the manipulation. And now the third box is considered, or D, distribution, is when you start looking for the distribution of that move for the night. Now, in this instance, it wasn't the hardest manipulation. It wasn't the strongest, you know, the strongest manipulation. But when you look at it in the overall perspective, it, you know, it happened based off of our move, because what do you see? Consolidated, it built up buy orders and sell orders. So we got sellers with stop losses up there, and then we got buyers with stop losses right here. What happens? That's a terrible line. But what happens? Going into the third box, going into distribution, where does the market go towards? It hits those sellers, it hits those stop losses right there. It hits that low, that Asian low. And after it hits that Asian low right at 3 o'clock, what happens? It pushes up. Bam, it doesn't go and take out that buy side liquidity. It doesn't go and take out that high yet. But then going throughout, like we said, I mean, at 3 o'clock, it pushes, or 4 o'clock, my bad. 4 o'clock, it pushes up. It pushes back down around 5 o'clock, 5:30. And it's the same move though. And then where does it go towards? It takes out that high. After it takes out the high, it pulls back. And this is the same thing going into New York session of why you don't trade all night. After 5 o'clock, 6 o'clock in the morning, you don't want to trade London session anymore. There's no point of trading London. You might as well wait till New York, because more times enough, you're just going to get caught up in being in a move that you don't want to be in. You know, because if you try to sell it off right here, thinking that, oh, it took out the highs, and, you know, you start getting sellers momentum at, you know, 5 o'clock, 5:30, whatever time this is right here, what happens is it ends up pulling back. takes you out that trade, especially if you don't have a good entry. Now you're in drawdown. Now you lose a lot of money because it's impulsing up. And now, you start getting tempted to sell it again. Now you want to sell it again because you're like, oh, I got stopped out. It's got to come back down. And then what does it do? It goes back up again, same thing. And it just starts doing it over and over. And now, you spent your whole day trying to find sells when the market was bullish, all because of you wanted to trade too early in the morning. And if you just waited, and then on top of that, did your markups, that you wouldn't even want to sell it until it got back towards that high up there. So now it's taking out that swing high from February. Now you could think about, going into London session tonight, what type of sell markup would you want to see though? What do we want to see now is the same thing, right? The power of three, the PO3. What is the PO3? Consolidation, manipulation, distribution. So if we've been bullish and we know that it's overextended bullish wise, then what do we want to see is consolidate, manipulation, one more bullish manipulation to take out these highs, because sellers already got in this trade. People tried to sell it off up here, GU. People tried to sell it off right there. A lot of people will try to sell it off at the market close, right before the market closes. So they know that. So what are they going to do, right? Okay, cool. You guys think that you're just going to get off that easy and take it all the way back to the downside? Not a chance. It's not, it could happen. It happens, not to say it's not a chance, but it's a very slight chance that it just drops off without coming back up towards this high. So going into London tonight, what do you want to see? And that's the only thing that I'll wait on to sell it, is that if it drops down, I'm going to have to wait for a push up to take, if you want to try to play the buys, you could try to play the buy. But realistically now, because we know that it's already bought up 4 or 5 times, 4 different pushes, what do we want to see? Consolidate, manipulate, distribute back to the downside. So I'm gonna be looking at the buys as, potential manipulation to take out those highs, and then for them to go take it back down, take out those buyers that tried to buy in, because now you tried, it's like, why would you try to buy? Now you try to buy in now after it's done bought up for 1, 2, 3, it's bought up 300, almost 300 pips to the upside from the lows. Now you want to buy, now you want to buy in. How many pips are you looking to take it after it's already gone up for 260 pips, right? So it's like I said, that's why if we see that buy play happening going into tonight, I would, if you play the buys, I would look to scalp the buys. But overall, I could see that going, starting to make that way to the downside like that. So that's what I'm looking at with, like with GU. And like I said, that's why I like the UCAD setup. I'm looking for one more stop hunt to those lows, same way that we see it right here. Stop hunt to those lows with UCAD, take those lows out, and then get that push to the upside. Same thing with the DXY. For my people that just joined, I want to see it drag down at least to this institutional level, and then I'm gonna look for a bullish move back to the upside, back towards like these EMAs up there will be my ultimate targets. Looking at it with the DX, looking at it with the market maker perspective, this is the low that I want to see get dragged on the DXY, and then that's what I'm looking for, that move back to the upside. So that's just an overview of the call, I guess, and just time and price, and just going through more examples. You can go through so many examples of this right there, of just seeing it back and forth happening, right? Just seeing it happen over and over. Pushes up, consolidate, manipulate, pushes up, takes out the lows. Then what happens going into New York? Pushes down, pushes back up. Same thing. It's like these London patterns over and over and over again. So I'll send out the London pattern cheat sheet again in the Telegram. If you're not in the Telegram, make sure that this is like why I always say it's important to keep up with the notes and everything in the Discord, but I understand that the Discord's hard to navigate for a lot of people, or my group specifically, I guess, or group. I don't like saying my group, but for the group, I understand that Discord's hard, so just make sure that, go through, join a link in the Telegram or in the Discord. Everybody with the bot, I'll be making a new bot, a new Telegram chat with the bot. So just look out, I'll be adding everybody in there throughout the week, for the bot, and just giving out the updates with that. No, I didn't look at any JPY pairs. We could look at JPY real quick, but I haven't really been trading JPYs too much other than UJ, but we could check it out. Make sure you join the Discord, follow the YouTube if you want to, watch those trainings and whatnot. But you could check out some of the JPYs. I haven't, like I said, I've been trading UJ. Let's check out JPY baskets real quick. If you're trading, if you're trading JPY pairs, you want to be focused on JPY baskets. But this is another reason why I do like that UJ bullish setup, If I'm looking at like JPY baskets, it's overextended, right? I mean, it's been super bullish, and we can see that it came. It took out these highs that I already kind of had marked. So I kind of been eyeing baskets, in a sense, because it came, it took out these lows, which we killed it on the buys to the upside on baskets, but now we see it's pushed up and it's created, multiple pushes. It pushed up once, pushed up, it pushed up 3, 4, 5 times damn near all the way up towards these highs. Now it's taking out these highs all the way up here to start this week, it looks like. Yeah, to start this week, basically on Sunday, JPY baskets came, pushed up again, took out last week's highs, took out these highs all the way from February. So now with baskets, what's your name? What did I say? I forgot who said something. But now I'll be looking forward to come back to the downside. So I like the bullish UJ setup and like bullish setups on the JP on like EJ or UJ or GJ. I prefer though, I'm probably preferring those setups with that because it's just looking at baskets. I'm looking for it to push up, but ultimately looking for it to come take out that liquidity from Sunday right there. Take out these. We see a clear double bottom right. Let me zoom in because I'm probably the only one that can see that. But if I'm looking at baskets, right, I see a double bottom right here. I see a clear double bottom right there. Oops. Double bottom right there. Same type of thing right here. That liquidity right there that got hit. We have like a lot of lows that never got hit, never got touched. So that would be another area of liquidity right there. This is the Sunday open from right here. When the market came, dropped down. So it came and took out these highs right there. So I'm kind of looking for, I like the setup, right? I look at some JPY pairs going into London tonight, but looking for it to potentially just like push back up towards that structure and then looking for baskets to reach back down towards these lows. So I would probably be looking at, we could check out, let's just check it out real quick. I don't have to say if you want to leave, you can leave, but just check out GPBPYG. That's not, what is that? Paraguay. That's not what I'm looking for. JPY. Okay, there we go. All right, so yeah, looking at like that GJ setup, right? Looking at the 1 hour, I kind of see already a setup, potentially could be looking at with GJ, right? So it's dropped down. Let's see. We have like a double bottom kind of sitting right here with GJ sellers wise. We got a double bottom right there for liquidity wise. Yeah, when looking at GJ, right, I can see that double bottom still getting hit, but then when we look at it this way, we got a double top right here, sellers wise. We got an imbalance over here. We got this imbalance right there. So essentially what I probably would be looking for is the fact that we came, if we're looking at the fib, if you're able to catch it tonight, then you would still be in those buys because you pulled a fib out from this low of last week right here. It pushed up, created that double top, bam, dropped back down, gave out some good 88 entries on GJ, on the fib, and then pushed up. So you're kind of going to be looking for a continuation of that move from yesterday to go up, take out those highs, take out that fib level and play back inside this imbalance. And possibly even like we got a double top right here that look for it to push back up and then look for that move back down to go and take out these lows. So maybe this like double this area, this liquidity up here get taken and then look for, then we could look for that move to the downside. So this might be something to look at tonight, maybe to keep an eye out on. I probably would have preferred to look at it and catch this move right here, but you can, you could definitely, you definitely could catch a good move with GU or with GJ somewhere back inside this area. And back to those highs, GJ is over 400 pips back up there. So, it's something to look at. We could look at Euro JPY as well real quick. I know that's a favorite that people trade a lot too. And I like that setup. I like this setup too. Kind of like that same thing. I would pull out. And this might be one that, this might be a setup that I might look at tonight that I like a little bit more than the GJ one because of EJ actually came. This is last week's low right there. It took out last week's low. So if that's last week's low and it's taken out a weekly low with that stop hunt and a potential turtle soup type of thing right there, goes, takes out that low, then what could we look for now? Now I would pull out a fib from that low where it took out the liquidity to a high that's been created. And if that's the weekly low, the weekly high is all the way up here. And what's sitting almost at like the weekly high is not exactly a double top, but it's this general area of liquidity right there. That's the weekly high that you could see the market push back into. And also what's at that high right there is this imbalance, right? So this is something, this is something that I would look for right here, with this potential setup with EJ is a pullback inside of something like this and to this 50%, and then look for a move back up to go back and back to that Sunday open, back towards, that's the weekly high, which is, a very swing term type of objective, but long or shorter term objectives would be back towards that high, these highs all up here. And then, because you're going to expect retrace, and it could even retrace and then go. So you want to make sure that you're securing money back at, each level. So this might be something that I'll keep an eye out on tonight. Might be, this might be the one that we could, potentially, trade as a group or something together. Let's see how many, I don't know the risk be like on EJ. I haven't traded it in a minute. It is pretty, it's a volatile pair, right? It moves for a lot of pips, even just off of, measuring out like a setup off of a fib or something like this on the 1 hour time frame. This is almost over 100 pips back to the low. And then, but I mean, essentially back to the high, it's over 500 pips. So it's a setup that you want to, that you want to look at. If you, even from the 50%, if you enter this off the 50%, you'd be risking back to that swing low or back to the low of the week. You'd be risking over 100 pips on that on the 1 hour, off a 1 hour setup, which is why we go down to our lower time frames and we want to find, precise entries. And a lot of that is about waiting until time and price. If you're a swing trader, you might enter this trade based off of this, right? And when it comes to this 50%, because you're not looking for the best entry, you're not looking for the best move. So you might just enter it and then take it back to the upside and, place your stop loss. And if it goes in the drawdown, you expect that and you're not worried. But if you're a day trader, you don't want to go into that much drawdown and you want to wait until it's perfect, until your time's to trade. So that's just that's a potential setup that we'll look at tonight for my, my JPY pairs. And yeah, you guys, that's pretty much everything. I noticed that we went from 13 to 7. So I know that stayed on a little longer than expected, which is all good. I think this might be one of the favorite setups that I, found tonight. But like I said, EJ's super volatile, so it's easy to over leverage and blow your account super fast. So we'll look at it. We'll keep an eye out on it. And I appreciate you guys for hopping on. The call was recorded, so I'll make sure that I send out this recording. After I'm gonna upload it to YouTube, and I'll send it out in the Telegram chat as well. For my people in the live trading group, like I told you guys, this week it will be open to everybody. Next week we'll go back to being in the private group and whatnot. If you're not in mentorship and you want to get in mentorship and you're watching this video, feel free to hit my DMs and, can figure something out. I haven't accepted people since last year, realistically, but, I'll be opening that back up with, as I start promoting the group and whatnot on TikTok, YouTube, and everywhere. So I appreciate you guys for hopping on, and I will see you guys. I'll see you guys for London session. Look out for a Zoom call potentially for London for New York session. So, just keep your eyes out on the Telegram chat. So I appreciate you guys. I'll see you guys soon and have a great rest of your night.